Hello, everybody. Welcome to Real Wealth Network's Tuesday webinar. How you doing? Happy you could join us. Today, we're going to be talking about Columbus, Ohio, which is a new market for us. We've actually been testing these guys for a while, and reviews for the few people have been good. So we're officially unveiling them to the general membership effective this week. So that webinar is going to happen in 2 days, and we'll get to that in a minute. But today, it's all about Columbus. My name is Ben Smith. I'm the Director of Investor Relations and Investment Counselor. And so glad you could join us. There we go. Okay, upcoming webinar. So 2 days from today will be the Columbus Income Property Showcase. And just to explain, it's a little confusing, but it really isn't. On Tuesday is kind of the intro where we talk generically about a particular market, in this case, Columbus. So the focus of today's webinar will be to kind of blow through Columbus and talk about what's good about it. And then 2 days from today, we will have the actual affiliate from Columbus who owns and renovates the properties. He'll be on with me, and the focus on that webinar in 2 days will be for him to go through a bunch of properties he has available. I have no idea how many it'll be, whether it'll be 2 or 10. I guess we'll find out together. But that's the webinar that if you're really interested in Columbus, you want to attend that one as well. So see how there's that little asterisk, and the asterisk says must have had a strategy session. Okay, well, what a strategy session is where you're talking with me, or there's 2 other investment counselors, Joe and Aristotle. You book a time and you talk with us for 15 minutes or so, and we just kind of make sure that you're ready and you're up to snuff, and you want to invest within about 6 months and whatnot. And then boom, you've got the keys to the castle. You're in like Flynn, and you can attend the Thursday webinar. So that's how it works. Now, the following week, next week, we're going to be doing the same thing on Tuesday, Dallas intro, Dallas Fort Worth, and then we're having the full-blown webinar with the Dallas affiliate on Thursday the 4th. So that's the plan, and that's generally how it works. Now, the next live event we've got is May 4th and 5th in Northern California, that is San Mateo, and Southern Cal, Los Angeles on the 5th, that's Sunday. And it's going to be a big event. Normally, we traditionally have 3 different property providers or affiliates come out. In this one, we've got 5, 6, 7. We've got Huntsville and Montgomery, which is actually the same guy, but we're going to count them as 2. Then we got Cincinnati. We've got Cleveland, Albuquerque, Houston, and Dallas. So that's 1, 2, 3, 4, 5, 6, 7 different cities, all going to be talking about their stuff. And it's, I don't have the times here, but usually it's in the middle of the day, starting around noon and going till about 4 p.m. or so. So if you're interested in that, please log on to realwealthnetwork.com and register. We really like it when people register so that we know how many of you are going to be appearing. All right, there's me, my smiling mug. I've been doing real estate for about 25. It's probably closer to 28 years now. Used to live out west and did a bunch of California stuff, and then lived in Arizona for about 3 years. Well, I lived there for longer, but for about 3 years I did fix and flips, 2011, 12, and 13, and then I couldn't do them anymore because people were practically paying retail at the auction. Kind of takes the point of it away. And I currently own 12 properties. I've shifted east. I moved to Florida about 3 years ago, and now all the stuff that I own is in Florida or Ohio or Pennsylvania. All righty. So there's Rich and Kathy, our co-CEOs, frolicking on the beach of the Pacific Ocean. And so just want to touch a little bit on what Real Wealth Network is. So we like to simplify real estate investing. So most of the people that we talk to, probably this applies to you guys listening, is you want to create a passive income stream, and you think real estate is one way to do it. You may have a bunch of stuff in the stock market, you may have annuities, you may have other things going on, but real estate is a fantastic way, I think, a linchpin way of creating passive income. So you buy these houses for 20% down, the tenant pays all the costs. Over time, you send in extra principal payments because you've got extra positive cash flow, and then 15 years down the road or so, you own the house outright. And now you've got this little box spitting off cash every month, mail money, And if you multiply that by 5 or 10 houses, you've created yourself a nice little $90,000, $100,000, $120,000 passive income stream. It's really a nice way to, I think, add to your income. So anyway, why Real Wealth Network? Well, first of all, it's free. We don't charge our members anything. You just need to log in. We don't spam you. We don't barrage you. We don't sell your name to aggregators from Bangladesh. You're in good shape. When you're ready to invest, then we connect with you. And connect is kind of our term for strategy session. We call it a strategy session, and it is, but we're really just having a 20-minute one-on-one connection with you, figuring out what your goals are, what you want to do, and kind of help you in that, steer you to certain markets, suggest certain markets based on what your proclivities are, preferences, and we connect you with those particular resources. So that's pretty much how it works. So we have a bunch of different facts, frequently asked questions. First of all, we don't help our members flip. That's not really what we do. I used to do it, like I already mentioned, and it's a really fun thing to do, but it's not something that we generally advocate. Flipping is fine if that's what you want to do, but that's not what we do. We help you buy for the long term. That's the goal, buy for the long term. If you plan to purchase property with cash, you'll need to have 60K. And the reason, emphasis on that is with cash. So in other words, if you are just buying 100% cash, the lowest, cheapest house that any of our affiliates generally have, it starts around 55, 59,000. So we just like to say 60,000 because there's always closing costs. Now, if you're planning to use your IRA, like you have a self-directed IRA, maybe right now it's with Fidelity, but you're going to move it over and make it a self-directed so that you don't have to stick with the stock market. In that case, you'll need to have at least 50K. And there's reasons for that. If you get a loan, they usually require you put about 40 to 50% down. So, doing the math, you'll need to have about 50,000 in your IRA. All right. Most people, however, plan to obtain conventional financing, the golden tickets, as Chaley Ridge calls them. She's one of our lenders that we like to use and recommend out in Portland. Everybody gets up to 10 Fannie Mae, Freddie Mac loans. And if you use those loans, you really only have to put 20% down. But there's certain requirements that come along with that. You need to have a credit score of about 680, ideally a 2-year job history, although there's plenty of people who are self-employed that have no problem. You just have to jump through a couple extra flaming hoops. It's no big deal. You always need to have 20% down. Few months reserves. It says 6 there. Those standards have been relaxing a little bit. But it's good. You don't want to use your last dollar to buy a rental property. You want to have reserves, absolutely. Low debt to income ratio as defined by your lender, usually about 40, 43% debt to your income. And you can't have more than 10 finance properties. That's that golden ticket rule. All righty, here's our friendly disclaimer. Real estate purchases subject to investment risks. And while we use our best efforts and proven protocols to screen, review, and understand the operations of our affiliates, we can't and do not guarantee the performance of investments because we can't. They're a separate company. You're buying a house. You have to realize that it's not a mutual fund. There's things that will happen with houses. It's a responsibility of the investor to perform his or her own due diligence and analysis before retaining an affiliate and prior to purchasing an investment property. For anyone purchasing a property, this is important. Real Wealth Network requires you to order an inspection from a licensed home inspector. So you decide you really like the Birmingham market, and you've watched the webinars and you've spoken to them and everything. You select a house and you're going to go forward with it. You tell your lender that you've been pre-approved with, but now you need to pick up the phone and find a home inspector to go inspect that property. It's just always a good idea to do that. And it always pays for itself too, because there's usually things that happen that they find. And you also want to order an appraisal. Now, if you're getting a loan, the lender does that. You don't have to worry about it. It'll happen automatically. But if you're paying all cash, then you definitely need to order an appraisal. The little red circles there are all the markets that we are in. And by what I mean by that is markets that Real Wealth Network has determined, in our humble opinion, are good markets to invest in. And step two is we found an affiliate in each one of those markets, a property provider that we've then checked out, put through the ringer, had them answer questions, looked at their background, flew there, checked out their operations. And anyway, so starting from left to right, we've got Albuquerque, New Mexico, Dallas and Houston in Texas. We've got 3 different cities in Alabama, Huntsville up at the top of the state, Birmingham in the middle, and Montgomery down at the bottom. We've got 3 locations also in Florida, starting at the bottom this time. We've got Tampa. In the middle, we've got Orlando, and up at the top, we've got Jacksonville. And then up there is Chicago, Indianapolis, Detroit, Michigan, Pittsburgh over there. And then in Ohio, up at the top is Cleveland, wherever the blue star is. That's Ohio. You can't see it because the star's covering it up. And the bottom of that state of Ohio is Cincinnati. And right in the middle, beep, is a nice pretty blue star. And that would be Columbus. And we're going to be talking about Columbus today. So the population of this place, 860,000 in the city, but 2 million in the greater Columbus area. And we try to stick with metro areas that are at least 800,000 to 1 million, just for diversity of industry. It's the state capital of Ohio. It's got the Ohio State University that we all hear about, 5 Fortune 500 companies, and gee, right in the middle of everything too, because our Cincinnati affiliate that many of you know is up north, and this is only 100 miles from Cincinnati and 70 miles from Dayton. There's all the major employers there, banks, colleges, hospitals. All right, diverse economy. I'm not going to sit here and read this. I'll just leave this here and you can kind of look at it, but it shows, I mean, diversity right there. Look at all the different colors on the pie chart there. There isn't one that's really dominant. I mean, maybe you could say the government being 25%, but everything else kind of nice in the teens chunk there. Education, finance, utilities, information, retail, trade, manufacturing, and healthcare. There they are over on the right. Wow, Ohio State, 31,000 people, it said there up at the top. 66,000 students at OSU, and you know it's funny, all these numbers it says down there at the bottom, it doesn't even include the students from all the other 30 plus colleges and universities, but it's a big place. When I went to a big college, but it was only it was a university, it was 30,000. OSU is huge. All right, population and job growth. I guess all I really need to say here is it's got a very steady, very even, steady Eddie increase. I mean, there's not 1 year. It's kind of funny. I almost wish this went back so we could see how it did in 2006 and 7 and 8, and compare that to 8, 9, and 10. But I have a feeling it'd probably just continue on this steady growth. Population and job growth, 9,000 new jobs. So the point is, you're not buying or investing in an area where people are leaving in droves and the jobs are disappearing, clearly. And that's really the point of this. Now, these line charts here, the middle line, the blue line, is the median home value of the metro area of Columbus. The orange line being the US overall, and then the red line being the neighborhoods that our affiliate in Columbus invests in. So we just kind of forget the US one at the top there for a second and just look at the blue versus the red. What it tells you is that the neighborhoods that our affiliate is investing in are cheaper overall than the neighborhoods in the Columbus metro area. And that's because generally our affiliates don't invest in the A neighborhoods. You know, if you give everybody a letter grade A, or every neighborhood a letter grade A, B, C, B and C's are usually the best ones to invest in because they're not too highfalutin, they're not too fancy, because those ones don't usually pencil out very well on paper, but they're also not scary neighborhoods with gunfire cracking at midnight. It's kind of right in the middle, your school teacher, firefighter, nice blue collar working class neighborhoods. And so that's the red line. Those are the neighborhoods that we invest in. And Columbus is way below the national average, so it's going to be nice and affordable. Okay, here we go with the median monthly rent. Kind of the same story. $1,025 is what the typical rent of the houses that our Columbus affiliate invests in, a little bit below the 1,300 average of Columbus for all the neighborhoods, and way below the US at 1,427. Okay, the other really good thing about Ohio, and I've owned 4 houses in Ohio. I still own 3 of them. Sold one last year, but evictions are hassle-free, fast, as short as 3 weeks, low cost. That happened to me once. I had to evict somebody a long time, 4 years ago. I don't remember how long it took, but it did not drag on for months. It was pretty painless. Property manager handled it. Okay, so now we're going to go on to the sample properties. So here are the 3 sample properties. I think it's 3, if I remember correctly. So let's just talk about the all cash column on the right. This little white house. Now this house is not available, so don't get too excited. These are samples that were recently available. If you want to know houses that are available, tune in 48 hours on Thursday. So this particular house, $90,000, and it rents for $900. So like exactly at the 1% of the purchase price. And if you didn't have a loan, all you've got is insurance, property management, and taxes. That adds up to $222. And so you've got $678 left over every month pouring into your checking account that you have the property manager deposit that money into. So $8,100 a month. Now, if you were to have a loan on it, then these are calculated at 5.25, 80% loan to value. So that means you're putting 20% down, or $18,000. You still got really good numbers. And if you were to calculate this, the ROI, the return on investment, is probably going to be much better when you leverage it, because you put so much less money down. I mean, you're barely at 20,000 down, and you're making 3,300. Let's just do the math really quick. Yeah, 16.9% return, not bad. Not bad at all. All righty, so house number 2, $82,000. Cash flow of either $4,700 if you leveraged it, and $8,200 if you didn't leverage it and if you paid all cash. So you can divide one number into the other and see what your return on investment is, or at least what it is hypothetically forecast to be based on these numbers. But our affiliates, we really kind of ride herd on them to provide very accurate numbers. Believe me, if they were inaccurate with their numbers, we'd hear about it very, very, very quickly. So if anything, they try to be conservative with their numbers, not unconservative, not liberal, not loosey-goosey. All right, I'll leave it on this slide here for a second. Oh, and I forgot to mention, if anybody has any questions at all, feel free. You're watching live. There's quite a few of you watching. Just go ahead and type it into the question box, and I will take questions at the end, or maybe even a little bit in the middle if any come in. All right, we'll go to the 3rd house here. This one's a much pricier house. Okay, yes, let's address this. The samples, here's a question. The samples left out vacancy and repairs. What are market values for these? All right, over on the left, thank you for asking. Over on the left, it says, on the lower left, it says, it is also recommended down at the bottom that buyers set aside reserves for vacancies and or maintenance costs. Those are typically calculated between 3 and 6% of rents. So 3 to 6% of the rent. So in other words, okay, let's just be super conservative and say 10% of rents. So this place is renting for $1,250. So that means every single month you're going to take $125, or 10%, or 6%, or 5%, whatever you feel comfortable with, and just set it aside. It's your money. Just don't go out and spend it, or don't use it to play principal pay down. That way you have that money set aside for when there is a vacancy. All right. Here's another question. Are all utilities paid by tenant? Yes. The answer is yes. The only exception to that, in some markets, some cities are kind of funny about water. So they'll make the water stay in the owner's name, but the owner's not paying for the water. That just means the property manager has to bill the tenant. But that's logistical. Yes, the tenants pay for all utilities. Absolutely. All right, $135,000, down payment $27,000. You're going to fork out almost $30,000 for this, but it rents for a quite healthy $1,250. Monthly cash flow, $400 of cash flow every month flowing into your pocketbook. or your bank account, take $100 of that, set it aside for maintenance and reserves, and that's $300 extra every month that you could then use to pay down that mortgage, so the mortgage gets paid off early. That's generally the goal of most people, is that I talk to, at least, that's what they want to do. All right, questions and comments. All righty. So we took care of that question, Are these pre-sale, pre-construction house, or will be renovated after purchase? Good question, asks Michelle. And they will be completely renovated. So the way it works is that the affiliate, the property provider that we've vetted, that we like, that we've done our due diligence on in Columbus, they go out there and they buy these houses at foreclosure auctions, sheriff sales, estate sales, and sometimes just off the MLS, fixer-uppers or whatever. They buy them in their name or in their company's name. They fix them up to Real Wealth Network's published standards. They're not just putting carpet and paint on it. It's not just cosmetics. They're doing everything that they need to do to make the house in rentable, turnkey, rent-ready condition. By the time the investor purchases it, all that's been done. So you're not financing a renovation. The price listed on those previous 3 houses and the prices listed on the ones on Thursday will be the price you pay for the house, and it will be ready to go. A tenant can move in tomorrow. Are there any in opportunity zones? Are there any multi-units? Okay, those questions, I don't know for sure. Most of our affiliates do occasionally come across a multi-unit. I know Cleveland does, every once in a while, maybe 1 in 10 houses is a duplex. Some of our other affiliates kind of do a little bit more, but it really depends on the market. Most of our affiliates, the emphasis is on single family. Now, in terms of opportunity zones, that would be a question to ask them. Real Wealth Network is dealing with opportunity zones, and we're going to start in Chicago, Tampa, and Jacksonville. And what I mean by that, and that's not the subject of today's webinar, but if you're interested, if you've got a qualified gain and you would like to invest in opportunity zone type properties, then you need to talk to your investment counselor, and then they will put you in touch with one of those 3 cities that we're starting in. That doesn't prevent you from going ahead and asking, but there's a lot more involved with opportunity zones. All righty. Let's see. Question here from Alan. I'm used to 10% for management for single family homes. Is 8% typical in all your markets? 9% when over? Yeah, everybody's a little bit different. Almost always it ranges between 8 and 10. Usually the less expensive markets are 10, simply because when you think about it, it takes just as much effort to manage a $600 house as it does to manage a $1,500 house. So the markets that are much cheaper tend to be 10, but we're 8% here. So it just depends. And in fact, we have one market, Dallas, that's even a little less than that. I think they're 6.5. But the range is 8 to 10 for almost all of our affiliates. What is a typical timeline for rehab turnaround, purchase to rent ready? Okay, well, here's the thing. They buy the house and they fix it up while they own it. So by the time you buy it, it should be ready. So there is no timeline. It's like 0. Now, maybe if you fly into town and you visit and you take a tour and you see the available properties and you're like, I really like 123 Main Street. Well, 123 Main Street is in the middle of being rehabbed, but you have to get a loan anyway. It takes 30 days, 45 days to close. By the time you close, most likely the property will be completely done and they will have turned it over to their property manager. And so hopefully, in an ideal world, it'll be income producing and with a tenant by the time you close on it. Now, that doesn't always happen, but there's certainly not rehab happening. The rehab is all done because you're going to get an inspection and an appraisal, and you want the inspector and the appraiser to see the finished product before they inspect or appraise. So the answer to your question is, by the time you own it, there is no turnaround. When they buy a house and they're rehabbing it, that would be a question to ask them. But every time I've had other affiliates answer that question, it's, they usually take 3 to 4 weeks to rehab a house, depending on how much stuff it needs. How is Real Wealth Network making their money? A cut of the sales price. Yes, the way it works is if I refer investor Fred to Houston, and Fred's really interested in Houston, and we talk, and Fred likes Houston, and Fred ends up buying 2 houses from Houston. The Houston affiliate sends Real Wealth Network, it's a broker-to-broker finder's fee. So we are a California broker, Houston would be a Texas broker. So per Department of Real Estate, they send us a finder's fee. It's a pretty small percentage, 4 or 5% of the purchase price, and it is paid for by the affiliate, not by you. There's no fees to you. There's no realtors involved. So any seller, whenever you sell a property, you're having to fork out 6% to pay the realtors. There are no realtors involved, so we get a small finder's fee, and that's how we do all this stuff, because we don't charge our members anything. You recommend property management companies? Well, yes. Part of the deal is that every affiliate property management has to be part of the deal. And they always have a property manager. Either they do it themselves or they have a third party do it. So like Tampa, for example, they don't manage their own properties, they rehab them, but they have a great relationship with a property manager, and that's all that property management company does. Other companies, other affiliates, they have a division of their company that does the property management. If we are out of state, who will represent us on our behalf, and how do we get in touch with them? All right, I will get to that in a second. I'm not going to take that one. So turnkey, for the most part, yes, it is a turnkey property. We like to use the phrase rent ready rather than turnkey, for the simple reason that a lot of people throw around the turnkey label a little too loosely, and they might just be doing paint and cosmetics. Rent ready meaning, no, we've looked at the flooring. The affiliate has the affiliate has looked at the flooring, the electrical, the roof. They've done the cosmetics, but they've also looked at the infrastructure of the house, electrical, structural soundness, so that you're not going to have a bunch of stuff to do 3 years down the road. How close to Ohio State is the property we buy? I don't know, man. I don't think I've ever been to, I think I've been to Columbus once. I don't know. But for that, you need to sign on to Thursday webinar and ask him. I'd have to look at a map. But close enough to where it's not that big of a place, 80,000 in the city, so shouldn't be a problem. All right, so let me go back to this other question. If we are out of state, who will represent us on our behalf, and how do we get in touch with them? So here's how it works. You get an investment counselor. There's 3 of us. And all that means is that you talk to us for maybe 15 minutes, maybe as long as a half an hour. We kind of talk to you about your goals, what you want to do. And if Columbus is of interest, we then send you an email with the Columbus information. And that's how it works. All right, if you are interested in investing in Columbus and want to attend this Thursday's webinar with the Columbus affiliate himself, rather than me kind of guessing on how far away OSU is, they will actually know because they live there. So if you'd like to attend the Thursday webinar and hear the details, click on the link in the email I just sent you. Everybody who attended this webinar, we have your email address, and we sent you a link in the email, and that way you can schedule a time to connect with me tomorrow or Thursday morning before the 12 noon Pacific time, 12 noon webinar. Now here's kind of the key thing. If you're not particularly interested in Columbus, right? You're like, yeah, there's 13 other markets. I prefer to kind of look at the bigger picture. I don't necessarily need to see the Columbus webinar Thursday, but I still want to connect with Ben or somebody, that's me. Then we request that schedule a strategy session, but don't have to take up one of the slots tomorrow, because we're kind of trying to save the slots tomorrow for the people who really want Columbus. But anyway, either way, if you want to be able to attend all the Thursday webinars where you actually see properties that are actually available with actual numbers and an ability to reach out to that seller directly, then you want to have a strategy session and connect with us. So I hope that makes sense. If anybody has any questions at all, you just need to schedule a strategy session or type it in the question box right now and I can answer it. But I think I pretty much gotten to everything. Bottom line is Tuesday webinars are general webinars to kind of introduce you to Real Wealth Network, how Real Wealth Network works, how we find and vet and do our due diligence on our affiliates, how we make our money, what the goal is. And the Thursday webinar is more focused on actual properties from that affiliate. So there you go. And I've just got another question from Michelle. I'm interested in the Florida market. Can I connect with you for more detail on those properties there? Absolutely. We're just talking about Columbus this week because this is Columbus week. But you go onto our website and you can see all the different markets we have and general information about all of them. And yes, Tampa, Orlando, and Jacksonville are 3 markets in Florida. So Michelle, just book a time. Book it anytime. And we'll talk about whatever market you would be interested in. And we help people narrow it down. Sometimes people are like, I don't know. What's the difference between Houston, Jacksonville, and Chicago? What are the pluses and minuses? So that's what we're there for, is to kind of talk about that stuff. That about does it. So thank you all for joining. We really appreciate it. There was about 30 of you online, and more of you will be watching the archive. These webinars, by the way, will be archived. And let's see. Here's a question from Chris. I didn't see a link for more info. Well, yeah, there isn't that. You're supposed to, you get an email from me, and then you click it to do that. For more info, you can just go onto our website. I mean, we do have GoToWebinar. We have all kinds of different things that you can watch on that. So I hope that makes sense to everybody. I hope to see you, do a session with you tomorrow or Thursday morning. And thank you so much for attending. And we will see you in a couple days. Thank you so much. Alrighty, bye-bye.